Hi everybody, welcome to Adapala Academy's current affairs discussion videos. In this lecture, we will see the current affairs from the month of February from the topic Economic, Industrial and Social Development. The topics selected are Sovereign Gold Bond, Micro, Small and Medium Enterprises, Fiscal Deficit, Most Favored Nation Status and General. Sovereign Gold Bond Scheme. So recently the banks have issued notice for the people to apply for this scheme if they want to buy gold bonds. So this topic has many times like sovereign bond scheme etc. So this we have to understand what are these things behind the scheme. So it is a scheme, is part of gold monetization scheme. So this is a larger scheme which covers this gold bonds also, launched by Government of India in November 2015. We know gold and we know monetization. Monetization means converting gold to money, that is currency. Why we need this conversation, that is important, because normally people like to save their wealth as gold, because the value of gold will be keep on increasing or at least will be staying the same for years, whereas the value of money decreases with the time. So gold is seen traditionally as an important form of saving the wealth. Also it has many religious and cultural implications. So Indians have generally preference for gold than other people in the world. So India is one of the largest consumers of the gold. So we are importing gold every year, and these imports are bringing an imbalance in our trade balance. Gold forms an important item in our import bill. So when government is trying to reduce the trade deficit, it wants to cut the imports or otherwise increase the exports. So when we are seeing our import list, petroleum products will come first. It is difficult to reduce its consumption, right? Because we need for our development. But this item gold we can reduce because we already have lot of gold reserves in our country, but again and again we are importing. What if we are utilizing the gold reserves in our country for our purposes? Then we can save on this import bill. That is the main purpose that the government came up with the gold monetization scheme. But there are a lot of cultural factors associated with gold, so it is very difficult to convince people to sell off their gold and convert it to money. So for that behavioral change, government is trying with many schemes like gold monetization scheme and gold bond scheme, where instead of saving the physical gold, alternatives are provided. That is almost same, like which is having same benefits as saving the physical gold. By gold monetization, government was encouraging individuals, trust, etc., which is having gold to deposit with the government. So when instead they can take back the money, or when they want to get back the gold, they can get the gold. But in between, this gold will be circulating in our market. So otherwise, if the gold is simply saving, there is no circulation in the market. So it is like a wealth is completely locked up here. So the investment is not generating further money in the economy. So normally an economy works like when we are inputting some money into some business. Say for example, I have started a food catering business. So I am investing some money into it. Right. Here I am doing some activities, preparing food, supplying. In that process, I am employing some people. I have 1, 2, 3 employees. And then I am selling it to the customers. earning money. Yes, this money I can use for my expenditure. So using this money I will be purchasing goods. So those goods will again create a chain. Some industries will be working behind it. So here also some activities will happen. And when I am paying my employees, they also spend this money in the market. They will also buy things. Their expenditure also creates some demand again. Chain will go on. This is how the economy works. So that means money creates money. So money should be always in circulation for creating different activities. Then only we will get the development in terms of the economic terms. But when we are looking up the gold in terms of savings, we are cutting out this chain. So money is involved here, but it is of no use. But instead, if we can recycle this gold in our economy itself, our gem and jewelry industries will be benefited, because they may not be depending on further imports, and they can get gold at lesser prices than the import, minus the import duty, customs duty and all. So they will be benefited. They will get a steady supply of gold. Again they will prepare ornaments that will be again bought by customers, and it will be recycled like that. That was the aim of government when they come up with the gold monetization scheme. But infusing a behavioral change is very difficult. So we can't tell like the gold monetization scheme was a success. Only a few people are willing to part away with their gold. So next was this gold bond scheme. So here on terms comes like bond. Bond, we will usually hear this term in the security market, that is capital market. Buying and selling of bonds, shares, equities will come under the capital market. So this bond is form a debt security. That is, if government is issuing bonds and we are purchasing the bonds, it means that we are giving money to the government. That is, government is taking debt from us. So government will give back the money after the maturity period with some interest, predetermined interest. So when we are buying bond, we will get the interest. That is also a form of investment. When a sovereign government means that government is the final authority in that land. India is a sovereign country because India is not under the influence of any other country. So when a sovereign country issues a bond, it is called as sovereign bond. And on term, gold has come in between. So this means that this bond is denominated in terms of gold. So usually when India government is issuing bond, it will be denominated in terms of Indian currency, rupees. So when bond is denominated in terms of gold, that is grams of gold. Minimum is 1 gram of gold. That is 1 gram gold bond means it is worth the value of 1 gram gold. So that's why such bond is called as sovereign gold bond. So government is issuing such bonds. It means that if I want to invest in gold, say I want to invest in 8 gram of gold, I can buy some 8 bonds. If the government wants to make the people to give away their physical goods or to deposit in the gold bonds instead of gold, the scheme should be attractive. For making it attractive, what are the features added to this scheme? It is like the quantity of the gold is protected. So if I am investing in 8 grams gold now, I will get 8 grams gold after the maturity period. Individuals, trust, joint families, these people are allowed to invest. They should be resident of India. That is, the main aim is we should not take gold from outside, right? So the condition is that the person should be a resident in India to avail this scheme. And physical gold, if we are saving it, it is associated with some risk of robbery. So we have to keep it in the secure secure lockers. So again people will end up in paying for the locker services, right? So instead, if we are saving in the form of bonds, it is more safe. It can be even digital form also. So it is offering end-to-end digitalization. All the transactions are marked in the digital repository. We can access the bond paper in digital form. Digital form is also equally valid. So it comes up with more security in terms of saving. Plus, this amount we are depositing for the gold will attract an interest. So physical gold won't give any interest, but this scheme we will be getting interest on the money we are depositing. So it is an additional benefit. And this interest we can either add in the quantity equivalent to the gold quantity, we can add into our deposit, or we can take back the interest as currency itself according to our option. And another purpose that people want to save in gold is because in case of emergency they can use this gold as collateral for getting loans. So it is one of the security for many people in India. In case of emergency, instead of going to high rate loans which are available informally, if you have gold, you can deposit gold and take gold loans. And same thing here also offered. We can deposit this gold bonds instead of physical gold and get loans. So it can be used as collateral for availing loans. So that benefit also there. So all the benefits that is associated with gold saving is there in the gold bond. Plus there is less security risk and some interest also will be earning. So this is the way government is trying to attract the people towards these bonds. And these bonds will be issued by Reserve Bank of India on behalf of the government, and RBI has authorized certain banks and other financial institutions to supply these bonds. We have to subscribe going to the each website. Say SBI I am choosing, so I have to apply in SBI website for this gold bonds. So when it is not issuing continuously, once in 6 months or so they will announce issuance of the bonds. That time we can subscribe and purchase the bonds. If you are comparing the difference between different debt instruments like bonds and equity, this bond refers to a debt instrument which can be bought and sold between two parties, and basic conditions are defined. How much will be the return, how much will be the interest rate, like that, and the maturity period, etc. But equity is an investment in a company. So it is like they are able to claim on the profit of that corporation. So they will get back the benefits in terms of the profit that company is earning. But debt security will be earning a fixed interest rate that is determined before. So it is less riskier option, because even if the company is not doing good also, they are supposed to give back the debt. See, if the company decide to wind up the operation, first they have to give back the money of the bond holders, then only they will be taking the case of the shareholders. So equity is associated with some risk. If the company is doing good, you will be earning good, otherwise you may not be getting any benefits. So we are studying this topic. In 2019, there was a question on different alternatives for loan. The options had shares, asset loans, debentures, gold loans, etc. So when such news are coming, we have to understand each and every term associated with the news. Then we will be able to answer the questions like this. Here the question was about debt finance. So the answer is debentures. Another question was directly from the gold monetization scheme. What was its main objective? It was to monetize gold holdings, to increase export of gold from the country, to reduce India's imports bill, meet targets of reduction in fiscal deficit. So the main aim was to reduce India's import bill by monetizing the gold holding from the country. Other options may come as the side effects of the scheme. There may be increase in export of gold from the country in terms of jewelry, and it may help us to reduce the trade deficit, not the fiscal deficit. Fiscal deficit is different and trade deficit is different. So this scheme is aimed to reduce the trade deficit. This balance of payments trade deficit is in terms of the trade, and fiscal deficit we will see it in terms of the budget deficit, revenue deficit, fiscal deficit. It has a budget, it comes in budgeting. So here the answer is D. What could be the possible questions from this topic? I have written an example. Consider the following statements regarding sovereign gold bonds. It is a scheme to fund government securities. It is a specific bond to replace physical gold as saving instrument. It is denominated in both dollars and rupees. Gold import bill can be reduced if this bond gets popularity. So first option, is this a scheme to fund government securities? No, because government is not in need of money. That is not the aim of issuing this bonds. Second, it is a specific bond to replace physical gold as a saving instrument. That is correct option. Third, it is denominated in both dollars and rupees. It is not denominated in terms of dollars. Till now, India has not denominated any sovereign bond in terms of dollars. So recently our finance minister was reconsidering the proposal for issuing sovereign bonds in terms of dollars, but later she only took back the proposal because there are a lot of risks associated with this. In sovereign gold bond, it is denominated in terms of the grams of gold, not rupees. So third option is wrong. Gold import bill can be reduced if this bond gets popularity. Yes, that is the aim of this scheme, to reduce the imports. So if more people are subscribing to the paper gold than the physical gold, we can reduce the import. So the options are 2 and 4. D. Next topic is about the different schemes taken up by the government to encourage MSMEs. MSMEs, micro, small and medium enterprises. They form an important part of our economy, which is providing employment to many people. So government wants to encourage MSME to encourage growth in the economy. So the news was that Cabinet approves continuation of credit-linked capital subsidy and technology upgradation scheme beyond 12th plan for 3 years. So this scheme was supposed to end in 2017-18. Now it has been extended to 2019-20. So we have to see what is this scheme, what are the different components of this scheme. We will see it in the coming slides. And apart from that, there was a side news that Department of Industrial Policy and Promotion, earlier it was known in their name, now it is renamed as Department for Promotion of Industries and International Trade. So you just note the name change. Earlier it was DIP, now it is DPIIT. So about MSMEs. In India, the MSMEs are mainly of 3 types. First, MSME is mainly rural based industries, that is traditional industry, weaving industry, spinning industry. Like that, traditionally some people will be carrying out the operations within their household. Mainly family members will be employed in that business. So such kind of business are called as rural based traditional household industries. Second type of industries is the industries which was started earlier and still running. So in the beginning we had metallurgical industries, steel industries on a smaller scale. But as technology increased, it has been taken over by the advanced plants and all. But still the people traditionally will carry forward their old methods of manufacturing and all. They are also in small and medium category. But they will be functioning with the old technologies. They will not be having enough capital to purchase the new technologies, and they will be still in the labor intensive works. More people will be employed instead of automation. And third type of industry is which is operating relatively newer technology field such as software, biotechnology, etc. They are not large scale industries but medium and small scale industries which is in relatively new technology. So these are the three different types of MSMEs in India. How we will be defining an MSME? Earlier it was based on the investment that is going to the industry. So the industrials will be declaring we have invested this much, say some 25 lakh. Then it will come under, if it is within 25 lakh, it will come under the micro enterprise. If it is between 25 lakh and 5 crore, it will come under small enterprise. If it is above 5 crore and below 10 crore, it will come under medium category. So it is all based on the declarations that is made by the industrialists. And for manufacturing and service, the investment is different because manufacturing needs more investment. So the limits will be lesser for the service industries. But this have some difficulties, like since it is self-declared, we have to have an audit or inspection mechanism to check whether they have declared correct or not, or they may not be giving the correct information for availing certain benefits or tax benefits like that. So instead of that, if we are redefining the way in which how we are identifying the MSMEs, these complications can be avoided. So the proposal is that we should define MSME in terms of their annual revenue instead of the investment. So it will be better measurement. So usually outputs are transparent. They have to show their receipts, bills, GST, etc. So in terms of that, revenue can be better monitored, such that business with revenue up to 5 crore will be micro enterprise, between 5 crore and 75 crore will be small, and 75 to 250 crore will be medium. So there will be uniform definition for both manufacturing and service industry if we are going with the annual revenue. So that is the proposal before the Union Cabinet, and Union Cabinet has approved. So this change will be implemented soon. Now we can discuss about this scheme. It is Credit Linked Capital Subsidy and Technology Upgradation Scheme. So this main aim is to upgrade technology. So we saw that many MSMEs are using obsolete technologies. They may not be having enough capital to upgrade their technology. So government is extending financial help for MSMEs to upgrade their technologies. How it works? Say, I am investing 1 crore in buying new instrument. Then government will be giving 15% of this investment as subsidy. For this crore, I should be taking from some financial institutions. So I should be availing loans from financial institutions. So 50% part will be given by the government. So it is like a subsidy to me. So when I am going for formal financing, this subsidy can be directly given to the financial institutions. So this is given up to 1 crore, maximum 1 crore investment, and that is some sectors and technologies are identified. Some 51 technologies and sectors are identified, and if I am going for upgradation in this defined sectors, I will get this subsidy. That is capital linked credit subsidy. That is credit linked capital subsidy. Capital subsidy means the subsidy is going to the capital investment. And technology upgradation. So other helps for the technology upgradation will also be given to the MSMEs. They will be giving technical help also to decide on which technology. So this scheme encompasses several ongoing things like Z. Z is zero defect. It is one of the quality assurance measures. So if you are aiming for zero defect, the quality of the products will be improved, right? So for ensuring zero defect, we have to invest in the process, we have to invest in the technology, we have to invest in the manpower, we have to skill them. So it needs some investment in this part. So this scheme, that is zero defect and zero effect. Zero defect mentions about the quality of the product. We are aiming for absolutely zero defects in the products we are manufacturing, and a zero effect implies the effect on the environment. So you note this point is about nil environmental impact of the manufacturing. That is, there should be zero emissions, there should be zero wastewater effluents from the industry. So we are aiming for zero effect on the environment along with the quality for MSMEs. That will greatly improve their performance and their products will also be acceptable in the international market. And another program is lean. So this is also related to quality. In quality you would have learned about lean manufacturing. What is the aim of the lean manufacturing? It mainly aims to reduce the wastage. So by reducing the wastage, the process will be made more economical so that the profitability of the industries will be improved. Increasing productivity through waste reduction. Increasing productivity. So they can earn more profit through waste reduction. That is lean philosophy. Next is intervention is design. So in the design stage itself, support will be provided, either the facility layout or product design or the equipment design. So the design part also government is extending help. Then cloud computing. Digitalization. Digitalization will help in improving the efficiency of the operation. So if they are going for cloud operations, there is associated benefits. Cloud computing is for digital MSMEs. And facilitation for intellectual property right. If they are having any innovations, help in filing the IPR right, getting the IPR protection, etc. That help also given by government. Next is incubation. It is nurturing new ideas. If you are a student and you are having an idea that can be made to a product or that can be made to a service, you can approach some incubation cell in your college, or you can approach the incubation cell in your nearby technology park that are supported by government. So this incubation is nurturing new ideas is also supported as part of support for MSME, because mostly these incubation centers will be transforming into MSMEs. Once their product is becoming viable, they will be emerging as the MSMEs in future. There are other initiatives also other than this CLCS-TUS scheme by government for encouraging MSMEs. For example, there is a provision to sanction loans up to 1 crore in 59 minutes. That is, this is service guarantee. When MSME is applying loan to the formal financial institutions, they are supposed to provide the loan within 59 minutes. That helps in the ease of doing business and availability of finance for the MSMEs. And if the MSME is registering with GST, they will get 2% interest rebate on the loans they have taken. So the institutional loans they have taken, there is a reduction in interest rate by 2%. And next is the demand side. So for creating the demands for the products from MSMEs, government purchases will be sourced from MSMEs up to 25%. So it is mandatorily 25% of the requirements of the different government departments should be sourced from MSME. We should study about MSMEs. MSME as such is important to our economy because they provide employment. Here one of the main issue we are facing in India is we have surplus labor with us. So the industries which is able to absorb more labor will be better for our economy. Instead of going high capital intensive automated industries that can produce goods at a faster rate and huge volume, industries like MSMEs are preferred because they can achieve the same quality product but at the same time employing more people. That is what required in the innate contest. So in that sense, MSME is relevant for our economy. So that relevance we can see in the exam questions. So in 2017, there was a question on Mudra Bank. Mudra Bank is specialized for helping the MSME. Helping MSME is the main mandate of the Mudra Bank. So you can see this question, it is related with MSME. And there was another question about encouraging startup entrepreneurship. So for encouraging innovations and making the people entrepreneurs. People should be encouraged to generate employment in the economy. Instead of relying on government for giving jobs to all people, that spirit should be cultivated so that economy will be thriving. So the possible questions can be: MSMEs are important to economy because it generates more employment. Yes. It is crucial for inclusive growth. Yes. Why it is crucial for inclusive growth? Because it will include many disadvantaged sections from the society. Even the people who are not financially very sound also can start a micro enterprise. So that will help them to climb the ladders of the economic status. Right? It will give employment to more people. Mainly this MSMEs will be employing women. So the rural women will be finding an employment. It will greatly help to improve their economic status, associated social status also. Third is they share the major portion of GDP. If we see the statistics, it contributes about 8% to GDP. So if we take the manufacturing as a whole, or agriculture as a whole, or service industry as a whole, we can share like it can share a major portion. But MSME forms one part of manufacturing. So in the total it is accounting about 8%. Fiscal slippage. In the interim budget for 2018-19, the government has revised the fiscal deficit target for 2018-19 to 3.4 of gross domestic product from its original target of 3.3%. And later in the actual budget, the target was again put back to 3.3%. So here we are concerned with the terms. What is fiscal slippage? Fiscal slippage is the situation where the government is not able to meet the targeted fiscal deficit. Then comes the question of what is a fiscal deficit? Fiscal deficit deals with the budget of the government. When you comes across the term fiscal, you remember that it concerns with the government policy. If it is monetary, it is dealing with the currency supply and all, it will be dealing with the RBI. Here policy related measures and budget related provisions, we will tell like fiscal policy, fiscal act, like that. So in any budget, we have two terms like revenue and expenditure. Revenue is the income and expenditure is the amount it is spent. So budget is nothing but a statement to balance between the revenue and expenditure of the government. So in the annual budget, there will be an account of what are the receipts that the government is receiving and what are the expenditure. Expenditure, we have two types of expenditures, that is revenue expenditure capital expenditure. So revenue expenditure means it is recurring expenses like payment of salaries, grants to states, like that. But capital is the one-time expenditure that will be going to building some infrastructure for investment purposes. So whenever there is an imbalance between revenue and expenditure, we will tell like there is a deficit. If revenue and expenditure is correctly balancing, we will call like a balanced budget. If the expenditure is more than the revenue, we will call it as like a deficit budget. If revenue is more than expenditure, we will call it like a surplus budget. So there are different intentions behind keeping this type of budgets, because it is in the hand of government. Government can either choose for a balanced budget or deficit budget or surplus budget. Normally government will be going for deficit budget. So why government want to have expenditure on the higher side than revenue? So there is an economic philosophy which tells that as the government spends more economic activities will happen in the country and it will lead to economic growth. So the government is giving impulse, or government is giving stimulus to the economic growth by increasing its spending. So when government is spending, that extra money will be coming to the country, that economy. So as we discussed before, money creates money. So this money will be triggering some economic activities. Again it will employ some people. Again it will create some activities. So that chain will go on and total economic development will happen. So the economists suggest deficit budget as a method to stimulate the growth. So in line with that philosophy, usually government go with deficit budget. So how then the balance will happen? If it is spending more, where will it get that extra money? That comes from borrowing. This government borrowing. They can borrow from international institutions or within the country itself. Domestic borrowing, it is called domestic borrowing. It will be funding the surplus money required for balance the budget. So when budget is presented, it will be represented as revenue equals expenditure. Here the expenditure will be matching with, even though it is deficit budget, here borrowings will be added. So borrowings will be added in the revenue side, that is input side, and it will be output side. So like this, the balanced sheet will be presented during the budget. So this portion denotes the fiscal deficit. So we can tell like the borrowings needed by the government in each financial year, we can tell like the fiscal deficit. We saw that there are two types of expenditure, revenue expenditure and capital expenditure. When the revenue, that is recurring revenue, is more than the recurring expenditure, then it is called a revenue deficit. So it means that the day-to-day expenses, not able to meet. So government has to borrow even to meet the day-to-day expenses. This is a very difficult situation. It is not sustainable in a long run. Why it is so? Because we are borrowing and putting for the expenses. That means that is not creating further value to the economy. But if we are borrowing and putting it as capital, it will act as an asset to the economy. It will help in the economic growth. But we are borrowing for our, if you take the household itself, for our day-to-day expenses, if we are in a situation like borrowing and eating food, that family cannot be out of poverty for a long time, right? At one point they have to pay back the loans. For example, if we are borrowing, in future there is a liability, right? The government has to pay back. Then again it will add on to the expense of the government, so that today's burden is like moved to tomorrow. So that after a few years, people may have to pay more taxes for the government to pay back the money they have received. So some economists do not advise keeping deficit because in future it is again a burden for the country. It will become a burden especially when it is going to the revenue expenditure. And what happens in a democratic country like India, once in 5 years, the government will change. So in this 5 years is a very short span in economy. So in this 5 years, the government in 5 years, what one government will be borrowing, they will stimulate economy, they will get the benefit out of it. And when other government is coming, they are having the burden to pay back the loans. Right. So this was going accumulating, the loans was getting accumulated, which was creating burden on the next government coming, and it is like an unethical method of managing the economy, right? Passing burden to the next government. So the parliament itself has passed a law to end this practice. That is, there has to be some responsibility with the present government to contain this deficit. They cannot borrow in huge quantities or in unsustainable manner, so that in future it will be difficult to manage. So that act is called FRBM Act. Fiscal Responsibility and Budget Management Act. So each government is supposed to follow the provisions of this act. It has various provisions to control the fiscal deficit. Effective revenue deficit is revenue deficit minus grants for creation of capital assets. So in this revenue deficit comes the grants given for state governments. So in the union government budget, grants for state governments will come in revenue expenditure. But these grants may be used for creating capital assets in the state. So if it is effectively used for capital assets, it can be subtracted from this revenue deficit, and it should be give the actual picture of the revenue deficit. For a sound economy, revenue deficit should be 0. Then there is a term called primary deficit. So we saw that the present government will be paying the loan. We saw that present government will be paying the loan that was taken by the previous government. So the interest payments or installment payments for the loan will also come under the expenditure of the government. So to know what is the actual economic policy of this government, we have to remove this part, that is liability part, from the previous government. So fiscal deficit subtracted interest payments gives the primary deficit. So primary deficit gives the actual picture of the expenditure of the present government, because it is removing the interest payments that the government has to do because of the policies of the earlier government. The Fiscal Responsibility and Budget Management Act, it was enacted in 2003, and it sets targets to reduce the fiscal deficit, and it had the target of reducing fiscal deficit to 3% of reducing the fiscal deficit to 3% of the GDP by 2008-9, and revenue deficit has to be completely eliminated by 2008-9. And if the government is not able to adhere to these targets, finance minister have to explain the reasons and suggest corrective actions to be taken in front of the parliament. So this is what the act rules. But our government, successive governments, were not able to adhere to the targets. In this scenario, government has constituted a committee under NKC to review the FRBM Act. It has to change the targets. It has to come up with a revised targets for the deficit. So as per target was 3.3 this year, and the government says that it is committed to maintain the 3.3 fiscal deficit. We saw that borrowing is one form of financing the fiscal deficit. So borrowing can be from either central bank of the country. This RBI will be giving RBI will be subscribing to the securities of the government, so government will get money. And it can raise money from capital markets. Different instruments are like bills, bonds, etc. Government will be issuing bonds. Public can also subscribe to the bonds, so the government will get money. There are situations like some countries have to go for printing currency in order to keep their economy alive, because government deficit will be at a very higher level. They will not be able to get finance from the international markets, and the public money with the public will also be very less. In such situations, government will print currencies and balance their deficit. So this is not a sustainable way to fund the revenue deficit. The long run, the economy will only suffer because the value of the currency will get decreased. But as a short-term measure and as an emergency measure, some countries are restoring to this practice of printing money and supporting the budget. You can take example of Venezuela, Zimbabwe, like that countries who is going through years of recession. It is happening like that. So we saw that government will be borrowing from public also by issuing bonds, bills, etc. Public can subscribe to the government bonds. So one of the criticism is that when public money is going for government bonds, the private sector will be deprived of money. So normally two bonds are available in the market, say one issued by government and another one is issued by a company which was started by me. So from the point of view of a common person, the government bond is more secure, right? So there is no case of defaulting the payment. Government will be paying the money back. Even though the interest rate offered in these bonds are less, general public sentiment is that they will try to invest in more secure instruments like government bonds than investing in a private company. So this will reduce the amount of money that will be available to the private parties to start or expand their business. So it may be adversely affecting the economy. How this news is relevant? In 2019, there was a question on fiscal policy. Fiscal policy means this use of taxation, public borrowing, public expenditure of government for the purpose of stabilization and development. So it is some of the policy measures taken by the government for economic development or economic stabilization. It can include taxation, it is about borrowing, it is about expenditure of the government. There was another question on what is not a component of capital receipt. So we saw that there are two types of expenditure and revenue, that is capital and revenue. So which are in nature of recurring nature, it will not be capital, but one time receipts will form the capital receipt. Market borrowing is a capital receipt, but interest payment will be a revenue expenditure. External loans will also be capital receipt. Receipt on taxes on property and capital transactions. So tax is a recurring income, so it will be revenue, not capital. Provident fund also. The possible question from this section can be fiscal deficit means revenue of government is less than its expenditure. Yes. Capital expenditures are not accounted in the fiscal deficit. No, that is not correct. Capital expenditures are also accounted in the fiscal deficit. It's a fiscal policy tool to boost growth. Yes, as per Keynesian economics, government should be having the role of stimulating the economy. So, most favored nation status. The news is that India has revoked the most favored nation status of Pakistan after the Pulwama terrorist attacks. So the most favored nation status was bestowed on Pakistan in 1996. So whenever there is a terrorist attacks, we can see that India will be revoking this MFN status. So we have to see here, what is this MFN status? MFN means most favored nation. So it is as per the WTO guidelines. WTO is World Trade Organization, which is standing for fair trade practices between countries. If there is no regulatory body to regulate the trade between different countries, so each country will act as an independent actor. They can increase the tariffs, reduce the tariff, ban the imports from some countries, etc. Even though WTO is there, we are still facing the problems. We are often seeing in the news that USA has decided to end the tariff concession to India, China. It has decided to end the import of certain products from countries like China. So these kind of issues will keep on coming. But as an organization aims to provide fair trade practices in the world. So as per WTO, each nation should consider every other nation as equal partners. There should not be partiality between one partner and another partner among the WTO members. So India is a member of WTO. Pakistan is also a member of WTO. What does it mean? The tariff rate and other policies that India is giving to other countries, same thing will be applicable to Pakistan also. But because of the bilateral issues between India and Pakistan, sometimes we will be revoking these provisions given to Pakistan. But as per WTO, we are not supposed to do so. So that means if you are considering a country as a most favored nation, every other WTO member should be considered as MFN. That is, all the countries will enjoy the same tariff rate and the same policy for the import and export. So if you are revoking the MFN to Pakistan, it means that India can increase the tariff rate of the products coming from Pakistan. That is, exporting to India will become more costly for the Pakistanis. Pakistani goods will become more costlier in India. So it will not be competitive. They cannot compete with other products in India and they will lose out the market. So in the end, Pakistan will be suffering because Pakistan economy is smaller compared to India's economy. So this action by India will lead to suffering of the Pakistan economy. So under international pressures, once we revoke the MFN status, we are again giving that status to Pakistan. But Pakistan has not reciprocated this measure. It has not given India the MFN status. Because if it is giving India the MFN status, Indian goods will be flooding their market. Because India is a neighbor country and economy wise India is stronger and we have more exports than them. So if they are giving same status like other countries, only Indian goods will be going to the Pakistan to India. Some exemptions are allowed in the WTO. It is only for the regional agreements. So for example, ASEAN is there, Association of Southeast Asian Nations. They have their own policies, free trade policies, tariff policies, etc. So it is applicable only within that group. So that kind of exemptions are allowed in WTO. But exemption for singling out a particular country, bilateral exemptions are not allowed under the WTO rules. Groupings. Second is special treatment for the developing and underdeveloped countries. So the products from the underdeveloped countries may not be able to compete with the developed products from the industrialized countries in the international market. So helping them out of poverty, the developed countries can give some tariff concession to the goods from developing and underdeveloped countries.
Possible questions from this section. Significance of MFN status in the international trade. First, reduced tariffs and trade barriers. Second, encourages trade protectionism. Third, trade will become more competitive. What does MFN status tries to achieve? It tries to ensure access to wider market. That is, each and every member nation will be having same rate so that it will be like a single market. So there won't be any high tariff or other trade barriers. So this will reduce to same cost of export from each and every country. So what the trade happening will be more competitive. And because of single rate, there won't be much bureaucratic hurdles at the point of import and export. So it gives the country who is importing the most efficient good. The country which is able to produce at a lesser price and more quality will be getting more market. So this is what a competitive trade means. So MFN tries to ensure competitive trade. But trade protectionism is opposite. Certain countries will be protecting their products. For example, India will be protecting its solar panels from cheaper imports from China by giving more import duties on Chinese products. So this will help to protect the domestic industries. Such trade protectionism is there in the market, but this MFN status tries to heal the negative impacts caused by the protectionism. So it is not encouraging trade protectionism, but it is trying to reduce the impacts caused by this trade protectionism by different countries. So from the options, 1 and 3 are correct. Reduce the tariffs and trade barriers, trade will become more competitive. So the answer is B, 1 and 3.
Then there's a app is an app for finding financial service points. It can be a bank, it can be a post office, it can be a common service center. So now we have facilities in our mobile to locate the ATMs nearby, petrol pumps nearby, like that. This service also available in a separate app. If you want to find such financial institutions or financial access point, it will be easy to find out. And there are various features like we can search by place name, and there is voice interface, and phone number of the bank branches also available in the app, so that there is facility of call button directly to the branch. And there is a provision for feedback also. If they have any concern with the services of the bank will be directly getting the feedback from the users. So this is aimed at a larger idea of financial inclusion. So in society, there exist different kinds of inequalities. Economic inequality, class inequality, status inequality, gender inequality. So financial inequality is also one type of inequality where some people are able to access the advanced financial services like banking, internet banking, etc. And there are a group of people who are away from this network. They are still relying on the informal means of financial support. For example, in rural areas, they will be mainly depending on the local lender for their money needs. But instead, if these institutes are able to penetrate into rural areas, they will be getting finance at a cheaper rate, and it will help them to invest in their activities, agriculture or allied activities, and it can pull them out of poverty also. Because many cases, poor people are suffering from the higher rate charged by the informal lenders, because those finance is readily available to them, and formal financial institutions are like far from them. They require so many things like ID card, collateral, land, address, etc. that a poor person may not be able to provide. So they are out of the formal financial network. But the aim of the financial inclusion is to bring such people also into this network. So government has launched on Jan Dhan movement. It was to create bank account for each and every household in India, so that they will be getting banking services, overdraft facility, etc. They will be given debit card, and banking correspondents will be there. In case the bank branches and ATMs are not available, banking correspondents will be traveling to the rural areas to give them the banking services. Inclusion has two aspects: inclusion in the financial activities and literacy. So people should be aware what are the different types of facilities that government is providing to them. If they are aware only, they will be able to ask for. Example, Kisan credit card is there. Farmers will be given timely credit by the government. But the farmer is not aware of such facility, he will not be able to get it, right? Related to this news, this point will be noteworthy. There was a committee on financial inclusion. It was headed by Dr. C. Rangarajan. Other government initiatives for financial inclusion are Pradhan Mantri Jan Dhan Yojana. That was the main initiative, flagship initiative. And different pension schemes were announced like Atal Pension Yojana to cover the uncovered people, informal sector people who are not under the pension cover formally. And licensing of new banks, different types of banks like small banks, payment banks, etc. Now, post office also has become a bank like India Post Office Bank. It will be having its branches in every nook and corner of India, so it will help in more reach and more people can be covered under the banking services. Kisan credit cards are there which gives timely credit to the farmers. ICT based banking services are there which are available through business correspondents who will be traveling to the people's places and help them to access the banking services. Then expansion of ATM network, linking bank with self-help groups, availability of increasing availability of banking credit to micro, small and medium enterprises. Insurance penetration, people are encouraged to take up different insurance policies like Jeevan Jyoti Yojana, Bima Yojana, like that, and encouraging startups with the different types of fundings, technological helps, etc. So this type of activities will help in financial inclusion. So the possible question can be, which of the following has its effect on financial inclusion? Stand-up India scheme, micro ATM, sovereign gold bond, electoral bond. Here, Stand-up India scheme is to encourage startups from the disadvantaged sections of the society like SEST entrepreneurs and women entrepreneurs. They will be getting additional help to come up with businesses. So it helps in financial inclusion. And micro ATM is the ATM that is available with the business correspondents. They will be carrying with them and Aadhaar number will be seeded to the bank. So giving the biometrics of the, it can take the biometrics of the people, and using the biometrics they will be able to take up the financial transaction. Like in ATM we are doing with debit card, in the micro ATM helps in the financial transaction using biometrics as identity. Sovereign gold bond is about investing in gold. It is not about financial inclusion. Electoral bond also not about financial inclusion because it is about funding the political parties. So the correct statements here are 1 and 2.